the kind of masculine energy, I think, is good. And obviously, society has plenty of that, but I think corporate culture was really like trying to get away from it. And I do think that there's just something, it's like, I don't know, all these forms of energy are good. And I think having a culture that like celebrates the aggression a bit more has its own merits.
Hey everyone, welcome back to this week's Future of Work Weekly Report. Today we're diving into a topic that has the potential to shape the future of how companies operate. Diversity, equity, and inclusion, or DEI. But instead of just looking at DEI in general, we're comparing how three of the most influential companies in the world, Meta, Apple, and Costco, are handling DEI during a time of turmoil. Spoiler alert, they couldn't be handling it more differently, and the results might surprise you. Let's start with Meta. Mark Zuckerberg, CEO of Meta, formerly Facebook, made waves recently by choosing to scale back and even remove a significant portion of their DEI initiatives. Why? Well, Zuckerberg believes that companies should focus on hiring the right person for the job rather than adhering to quotas for specific demographics. It sounds like a well-meaning approach on the surface. After all, who doesn't want to hire the best talent, right? Let's look.
The kind of masculine energy, I think, is good. And obviously, society has plenty of that, but I think corporate culture was really like trying to get away from it. And I do think that there's just something, it's like, I don't know, all these forms of energy are good. And I think having a culture that like celebrates the aggression a bit more has its own merits. It's one thing to say we want to be kind of like welcoming and make a good environment for everyone. And I think it's another to basically say that masculinity is bad. I think people just felt like the fact checkers were too biased. It just got to a point where it's just, okay, this is destroying so much trust, especially in the United States, to have this program.
Here's the problem. The mindset completely ignores decades of research showing that hiring decisions are not neutral. They're heavily influenced by biases. And to show this, I want to look at the data. Racial bias. Resumes with Black-sounding names received 50% fewer callbacks than resumes with white-sounding names. For gender bias, resumes with male names are 40% more likely to secure an interview than identical resumes with female names. Age bias, applicants aged 49 to 51 received 19% fewer responses than those aged 29 to 31. And ethnic biases, names suggesting Chinese, Pakistani, or Indian origins received 28% fewer callbacks than those perceived as white. So here's the catch. DEI isn't about giving one group preference over another. It's about creating equal opportunities. Meta's approach is walking away from that, while Costco, which we'll get to shortly, is embracing it and seeing better results. But before we go there, let's talk about Apple. Apple has recently come under fire for its stance on DEI, specifically around shareholder pressure to reject anti-DEI policies.
In recent years, DEI efforts have seen an uptick in pushback, and more than 100 bills have been introduced in 30 states aimed at restricting these initiatives. And some executives are increasingly wary of taking public stances on social issues, which could cause legal risks to businesses. 9 in 10 executives believe taking a public stance on a social issue is riskier than staying silent, according to one study.
It's a broader swath of Americans who are just sick of all the divisive woke stuff. They just want to be able to exist in the marketplace.
Recently, several major publicly traded companies and household names, including Tractor Supply, John Deere, Harley-Davidson, Ford, and Lowe's, scaled back their DEI policies.
As we look down that list of most trusted brands by conservatives in America, we realized they all had these policies, and they were all opposed to the fundamental values and tenets and beliefs of conservative consumers.
Robbie Starbuck has over 1 million followers across his social media platforms and has been able to galvanize conservative consumers.
So there's a real financial incentive for companies to look and take very seriously what we're saying and pull back where it's appropriate to pull back.
More people now have permission to be, quote, anti-DEI. And I think that for those organizations, they probably were already only doing it because they felt it was the socially acceptable thing to do. So they really weren't doing it because they saw this as a critical aspect of their business success.
U.S. companies spend an average of $8 billion a year on DEI. Training can be costly, ranging from a couple $1,000s to well over $1 million, depending on company size.
The DEI departments at large have cost quite a bit of money and have borne very little fruit.
The budgets are definitely being cut. We do find that in this era where there's so much backlash, we do find that organizations' budgets, have been cut.
Although business leaders are supporters of DEI initiatives, shareholders and board members are far less likely to prioritize it.
The board has a fiduciary responsibility to shareholders. These boards are understanding that when we reach out to their company, that there is proof already in the marketplace that we move the markets. And I don't want to destroy any businesses. I want to help restore the heart and soul of corporate America, which is the idea that the consumer is king.
One study found that while only 20% of U.S. companies plan to cut or eliminate DEI initiatives in 2024, the landscape is complex. Many organizations continue to view it as essential for business success.
There are many, many organizations who are still doing diversity, equity, and inclusion and who have come out and said, this is not optional for us because we know that it is a business imperative. This work goes in waves, right? And so there's the time when things are kind of quiet and you can just work the system and get things through. Nobody's really talking about it to the extent that we are now.
DEI pullback is a bit overstated, as organizations are largely doubling down on commitment, but risks are apparent, particularly to organizations who take public stances on social issues.
I think there's no question that the future is going to be won by companies that choose neutrality on divisive political and social issues. There's no reason that we need to know the social position of a diaper company.
Apple's approach has been much more cautious and committed to upholding diversity efforts, even as the pressure mounts from outside sources. Apple's commitment to DEI is particularly important. Like Meta, it's a global tech leader, and when companies like Apple make decisions on DEI, they send a message to the entire industry. But recently, Apple has had to defend its DEI initiatives against growing pressure from conservative forces who argue that such initiatives don't always align with the best business interest. The result? Apple is doubling down on its commitment to diversity despite the external criticism. Apple's stance is clear. Inclusivity leads to innovation, and diverse teams outperform those that lack diversity, especially in areas like product development and customer engagement.
Is it the normal ebb and flow of social initiatives, or is there a shift in corporate culture?
DEI is diversity, is representation. It's the number of people that you have in the organization that mirror the labor force availability.
When we're challenged with growth opportunities, we're often told to think bigger. You've got to think bigger. Well, you in and of yourself, in your existing team, in your existing structure, can't think bigger without new perspectives. And that's what leading bigger is widening your perspective by including others.
Despite challenges, a 2024 study found 75% of U.S. executives highly prioritize DEI, and those executives are being more vocal about their support. In a letter to shareholders, JP Morgan CEO Jamie Dimon said that the initiatives are driving inclusivity, innovation, and stronger financial performance. And MasterCard's chief administrative officer acknowledged the company's continued commitment to equality and fairness. Diversity among CEOs is also improving, with more women, Black, Asian, and Latino people occupying the position since 2019.
Over 70% of leaders choose proteges that are of the same race and gender. We like comfortable, we gravitate to comfortable, but what we have to realize in today's world and tomorrow's future, comfort means stagnation. It means a lack of change, a lack of forward movement.
So if you look around the room and everybody who's sitting there is a white male, and you're trying to sell products to a multiracial world marketplace, and you don't have anybody who represents that thinking, then you're probably not going to do very well in the marketplace.
DEI advocates point to several benefits, including improved innovation, recruitment, and company reputation.
We say we don't want to have people figure out how they fit in. We want to help people figure out how they stand out.
In 2023, more than 75% of companies in the S&P 500 use DEI metrics in the pay of CEOs and other C-suite executives. Still, less than half of U.S. corporate employees say their executive teams reflect the diversity of their employees in 2024. One of the problems with diversity initiatives is getting shareholders on board, especially when it is hard to translate to dollars.
Everything doesn't have to be quantitative. So we live in a society where if you can't count it, if you can't quantify it, then it doesn't matter.
And these are some of the sample metrics around the power of inclusion and inclusive workplaces. You've got over 70% more likelihood to generate revenue from innovation revenue, which is new products and services revenue. You have 70% more likelihood to capture new markets. You have a higher level of team performance. You have a higher level of collaboration. And importantly, given how critical talent is today, you have a much lower risk of attrition.
Now, let's talk about Costco, a company that truly gets it when it comes to DEI. Unlike Meta and even Apple to a certain extent, Costco has always placed a strong emphasis on the value of employee diversity. In fact, Costco's leadership has been vocal about the importance of DEI in creating a more innovative and inclusive workplace. Here's a quote from a Costco spokesperson. A diverse group of employees helps bring originality and creativity to our merchandise offerings, promoting the treasure hunt that our customers value. In other words, Costco understands that having a diverse team isn't just good for employee engagement, it directly impacts the customer experience and business performance. Costco has embraced the idea that a diverse workforce leads to better ideas and a more successful business model. They recognize that this isn't just the right thing to do, it's also good business. By aligning their DEI efforts with their business goals, Costco is showing us what happens when you value inclusion. So, why does all of this matter? Why should we care whether Meta scales back their DEI efforts or Apple faces external backlash? Let me break it down. Diversity isn't just a moral imperative, it's a business strategy. Research consistently shows that diverse teams are more innovative, more productive, and more profitable. Companies that embrace diversity outperform their competitors by a significant margin. In fact, McKinsey's research shows that companies in the top quartile for gender and racial diversity are 33% more likely to outperform their peers in terms of profitability. But the benefits of diversity go beyond the financials. Diversity brings new perspectives, whether that's a fresh take on a business challenge or a new way of serving your customers. When you have a diverse team, you can anticipate the needs of a much broader audience. So to put it bluntly, DEI isn't just the right thing to do, it's the smart thing to do. Contradicting the conservatives' narrative that we mentioned earlier. Looking ahead, the future of work is going to be shaped by decisions leaders like Mark Zuckerberg, Tim Cook, and W. Craig Jelinek, Costco CEO, make today regarding DE&I. So leaders, take note. Your decisions on diversity are going to define your company's future. Are you going to stand with inclusive growth like Costco, or are you going to scale back like Meta and risk stagnation? Employees are watching. They want to see leaders who are committed to creating environments where everyone has the opportunity to succeed. For those of us on the front lines, it's clear. We need to double down on DE&I, not just because it's the right thing to do, but because it's the only way to build a better, more innovative future. So as we close today's episode, remember, the future of work depends on how we handle the challenges of today. Companies that lead the way on DE&I are going to thrive, and those that don't will fall behind. So what can you do? Start embracing diversity in your teams. Stand up for what's right, and don't let short-term thinking take over. Thanks for tuning in, and I'll see you on the next Future of Work weekly report. Be sure to like, subscribe, and share with anyone you think would be benefited from this episode.